Hi, welcome back to the channel. Now, in this month's analysis, I'm going to walk through another really high-level broader market overview. I will be covering all of the major indexes and asset classes. I also have around 20 individual stock ideas for your watch lists going into October. Now, as always, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. For those of you that are perhaps new around here and you've just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. You should have some subtitles, but before I get into the charts, if you picked up last month's analysis, hopefully my work, my charts have helped you to pick up a lot of the massive discounts that we've had after the recent tech correction. If you follow my work on Twitter, hopefully my daily posts have helped as well. I'm told I've got pretty much everything spot on. I'll be covering a lot of the market warning levels this month, as well as some of my favourite charts going into October. Now, we are slowly getting back to the environment where the best players are scoring the most points again. I think most of us probably prefer that. Now, before I get into the charts and the analysis, for the disclosure, myself or my clients may already hold some positions in some of the names mentioned, but I have highlighted relevant disclosures on the charts. If you are new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate of systematic process. I think most of you know by now that I don't use any magical Harry hindsight indicators. I timestamp absolutely everything, which is massively important for the field in which I work. I'm one of the very few who go on the record with their work. My work is pretty much for everyone. I think if you are an investor, a trader, if you trade options, if you're a financial advisor or a money manager, you'll probably find a lot of value from the analysis. Unfortunately though, my work isn't for everyone. It isn't geared towards buy and hold forever, unfortunately. I'm looking for structural trends in the market that will last weeks to months. I like to use logical price targets and price levels. If we sat and had a beer together, I tell you I'm personally more of a technical investor these days, but my work does apply to all styles. I've got clients at most of the major investment banks now, if that means anything. But please do pause the video. Very important disclaimer before I get into it. As always, smash the like button and subscribe. It really does help to get my work a lot more noticed with the YouTube algorithm. So I think where I want to start is with seasonality this month. Now, we're obviously coming into US election season. I think your guess is probably as good as mine as to where we go with that. But over the last 75 years, we can see with seasonality, the final 3 months of the year tend to be quite bullish. It's a period of the year, I think most of us that pay attention to structural trends always like to come into the last 3 months. Now, it's obviously quite pleasing that the September effect hasn't quite kicked in as of yet. The caveat, I am recording this a couple of hours before the market closed on Friday. We do still have Monday to navigate as well, so the market could change somewhat. I'm not expecting any major shenanigans today going into the close, so I am hoping that the charts don't really change too much. But October tends to be quite bullish. I hope to see that going into November 5th, and we'll see what happens there. But I think one of the big questions that I'm getting at the moment, for those of you that, let me just step back a little bit, if you picked up last month's analysis, you already know that I made a massive real-time market bottom call when the VIX spiked a couple of months ago. Now, since then, one of the charts that I've just kind of been using is a really good risk-on, risk-off chart. It's a really basic, simple 10-month moving average that will keep you in the market when the market's going up, and of course when we start to decline and come under the the 10-month moving average, it really does help to sidestep a lot of major carnage. So we do still have a rising 10-month moving average. The market's obviously going in at new all-time highs. Now, I touched on the VIX chart a moment ago. I just want to bring it back into focus here just to kind of show you what I mean, because I think there's a lot of folks out there that get really scared when we get these massively elevated VIX levels. Now, I think one of the charts that I think shows, I think how a lot of professionals kind of use the VIX. There's not an exact science to it, of course, there never is with anything in the markets, but a really basic chart I like to use is, when the VIX is between 10 and 20, that's generally an environment where you're looking to buy stocks. I get the whole contrarian side of things when the VIX is obviously suppressed, that's a time to go short, etc. I think it's a lot of nonsense, but when we're between 20 and 30, I think that's in an environment where you're getting chopped about a lot, batting singles. Above 30, it's a hell no. Just stand back and watch everybody else get chopped up. But what's interesting is when you get that massively elevated VIX spike, that's in an environment where you're buying capitulation. So I think for those of you that are maybe not used to this, that's a really basic overview of how you can use the VIX. I think a lot of folks use it this way, but I think it's a really simple high-level visual that you can maybe use going forward. But one of the notes of caution that I have is with the yield curve at the moment. Now, if you've been following my work over the last couple of years, you'll know that I've been banging the drum that the signal for the yield curve, it's not when it's inverted, it's when it disinverts and comes out. Now, we have now done that, so a recession is reasonable to expect sometime over the next 12 months. Again, I think a lot of finance folks are probably in the same boat. So that does give a little bit of pause, over the next 6 months. So I don't tend to look too far out, maybe a month or two at the most at the moment, but it's the shorter term charts that I'm really more interested in. The S&P 500 is going out at new all-time highs. It looks like it's probably going to put in a new closing weekly all-time high. So that's again in an environment where you're probably looking to buy stocks and not short stocks. I think one of the things that I always look for, especially when looking at charts, is a really basic, simple failed breakout. If we get failed breakouts in major indexes above key levels and we start to fall away, that's generally an environment where you might want to just kind of step back a little bit and see if it's going to turn into something a little bit more sinister. The triple Qs, again, made a big bottom call on this one a few weeks ago, pulled back to a logical buy low, sell high level, and we've rallied since then. So I've actually been working with upside targets with our members and clients up around 500. I don't really see any reason at the moment to adjust that thesis. I think it makes sense to me at the moment. I think if we get up to that 500, 504, then perhaps technology, we might start to get a little bit of digestion of gains. But again, I'm super happy with the rebound that we've had over the last few weeks. Hopefully you are as well. The Dow Jones Industrial Average, again, looks like we're going out at new closing weekly all-time highs. The Russell 3000, which was actually one of the charts that I used in conjunction with the VIX a couple of months ago, pulled back to its 40-week moving average. Massive rally, and again it looks like it's going out at new closing weekly all-time highs. I think the riskiest stocks at the moment, I think a lot of folks have got a lot of eyes on the likes of the Russell 2000. For me, there is no real trend here in the Russell 2000. Very, very difficult to kind of pinpoint any optimal entries into the riskiest stocks. When you've got the Russell 2000 just chopping sideways, that's in an environment where you're getting a lot of the riskiest stocks are, moving higher 10%, pulling back 8%, up 6%, down 5%. It's a really choppy environment that just cuts a lot of investors up. So my work isn't really focused on the kind of riskiest stocks at the moment. The Russell 2000 and the micro caps, as you would expect, are currently just chopping about, no real trend. Now, the bond market. Now, the bond market's obviously very, very interesting to me, especially with our professional clients. Lots of charts indicate at the moment that there's a bit of pressure coming in with TLT. A lot of folks saying it's a failed breakout, etc. This is, I think, where systematic process probably comes into a lot of my work. I try not to overthink these little 1%, 2% moves around technical, price levels. My work's probably geared towards the institutional levels, where I'm not looking at 10-minute charts, I'm not looking at hourly charts, etc. I want to understand where the big money is kind of moving into the market. And for me, I think this level around 100 is probably key. But around these breakout levels, what we often find, and you find this not just with TLT, you also find this with the S&P 500, with Apple, stock ABC. You kind of get this breakout, then a little shakeout, then the actual breakout. So this is a chart that I've been working with our clients with over the last couple of weeks. It is currently one of my highest conviction ideas. It is coming under a little bit of pressure at the moment, but I am using the 10-week moving average as a systematic guide at the moment. Does look like it's rebounding a little bit here today, but I would have a lot more conviction if we get back up above this $100 level, and then I think that would bring in logical upside objectives. Obviously gold is a big one as well. It's been absolutely ripping higher. If again you've been following my work over the last few months on YouTube, you'll already know that the yield curve disinverting is really bullish for gold, and that's exactly what we've seen over the last few weeks. It's been absolutely ripping higher. I am still working with upside objectives around 3,200. It's a Fibonacci chart for me, but I think in the near term, I think probably a little bit of digestion of gains. It does look a little bit frothy up here, so I'd probably anticipate perhaps a little bit of a pullback in gold, precious metals, etc. Over the next few weeks. But again, that's likely in an environment where you're looking to probably buy up any weakness. Now, I am about to walk through, I think I've got around 22, 23 really good charts to consider over the month of October. But like I said at the start, if you are still here, it tells me that you're getting a ton of value from the analysis. Please do smash the like button. Like I said, it does help with the YouTube algorithm, and again, it really does help to get my work a lot more noticed. So I think a good place to start is a chart that I've been covering for the last few months. Every month I've tended to kind of cover Palantir. Again, I've been covering this on social media as well. I don't have any major concerns with the pullback this week. I think given the rally that it's had over the last couple of months, I think it's very, very reasonable, and it's perfectly okay for Palantir to pull back a few percent in a week. It's absolutely ripping higher. I see Dan Ives has just put a $45 price target on it at his firm. We've been working with that $45 target for quite some time. Big, massive, bullish cup and handle pattern, and again, ultimately hope to see it move towards that $45 level. Obviously, the big unknown at the moment is what happens going into the US elections. A lot of shenanigans. What does the market do? I don't have the answer to that. You don't have the answer to that. Your favourite analyst doesn't have the answer to that. We just need to kind of wait and see how things play out a little bit. But again, Block Inc. I think can make a lot of sense. I think for me, I'm viewing this as a potential inverse head and shoulders pattern. Again, this is one of the charts that we've been working with over the last couple of months. It's taking a little bit of time to play out, but we are still ultimately hoping for that $92 level to represent target 1. Nvidia, again, lots of questions on this one again, because I've been covering this one on Twitter and a lot of folks are asking me how I've been able to pinpoint the bottoms in the likes of Nvidia, etc. So I'll just quickly walk through that. The Nvidia chart, we are still working with upside targets around 138, let's call it. Nvidia literally just pulled back to a very logical support level. Now, I like to use institutional levels. I mentioned that at the start. I'm using ETFs, I'm using the triple Qs, etc. If you are expecting rebounds in the likes of semiconductors, which pulled back to the $200 level and caught a rebound, if we are having a look at the triple Qs, for example, and we can see that Nvidia, which is the black line, basically mirrors the triple Qs. We can see this is a correlation, basically just really simple way to look at this indicator is if the indicator is at a 1, it's a very strong correlation. If it's a -1, there's an inverse correlation. And if we're around the 0 line, then there's no predictive correlation. As we can see, we're at a 0.85. So there's a very, very strong correlation with Nvidia and the triple Qs. So if you are looking for alpha, if you are looking at the triple Qs and semiconductors, Nvidia just makes a ton of sense just for everyone. I think that would be the message with Nvidia. So we are still ultimately bullish on Nvidia, like I said. Hopefully get to that 135, 140 level. Microsoft, again, buy low, sell high opportunity a couple of months ago. Again, it is now hovering around breakout levels here around 435. For me, provided the market doesn't fall off a cliff over the next month, then I would fully expect Microsoft to go and test that kind of 467, 468 level. Tesla is now approaching target. Again, I've been covering this one on social media, on X, and of course our clients have got in low here, and ultimately the target that I've got there is 270. There's a lot of hype around this robo-taxi event that's coming in next month. We'll need to see if it's a sell the news type of event. It's made a massive run already. It's up nearly 35%, but I am viewing this as a majorly, potentially bullish chart pattern. I think if the robo-taxi event goes better than expected, perhaps it brings in more institutional money, and above that neckline, it could fly. I know Tesla's a very divisive stock. Elon's a very divisive CEO. But the chart for me made a ton of sense a couple of months ago, and it's been working out pretty well. And 270 is our next level there. Meta, again, Zuckerberg is doing Zuckerberg things at the moment. There's a lot of positive news, lots of deals with Meta, and it looks like it's going out at new all-time highs. Now, for me, individual stocks, etc., I think my work's probably starting to get a lot more known for my ability to pinpoint the buy low, sell high opportunities. But it doesn't mean that I don't neglect Meta, for example. I've nailed every single buy point on Meta over the last few years, and hopefully it's breaking out, and fingers crossed that it can keep moving higher over the next few months. Google, another one, buy low, sell high opportunity. I think the level that we're looking at here for the next entry would be around 160, let's call it 168. I think these Fibonacci levels look like they hold a lot of merit. So it's already up 10% off the lows, and I think if it takes out that 168 level, then you're probably looking at previous all-time highs as a potential upside target. Now, Micron technology is very, very interesting. Again, I posted this chart to Twitter just last week, just highlighting that we could be looking at a textbook bear trap now. Again, for those of you that follow the channel closely, will know that earlier this year I put out a bat signal on Micron. It met upside targets, again Fibonacci levels, but I really like these technical setups where it just kind of puts in that break below key levels, and then there's an earnings catalyst or there's some kind of catalyst that just whipsaws all the bears out the position, and then you get that move higher. So this is actually one of the charts that was shared during the week, again with our clients, and hopefully it's off and running to the upside. Netflix is threatening to break out to new all-time highs. Again, very similar kind of look to the chart like Meta, for example. There is lofty upside objectives to aim for. We are going to have earnings season again in a few weeks, so I think the catalyst there is probably earnings, but it is going out at new all-time highs. There is a potential for a bullish cup and handle pattern, technical setup there, so that might be a chart to keep an eye on over the next few weeks. Again, Amazon has already met our first upside targets there, around 190, just kind of patiently waiting for some kind of technical signal from consumer discretionaries to take us and propel us up to the best case upside target, which is around 223, 224. eBay I have been covering for the last few months on YouTube. Some folks have asked for an update on it. There is nothing really to update with eBay. I think the chart, the thesis, the technical setup is all playing out as expected. The upside targets that we're still working with eBay are up around $80. Obviously, I think having some kind of risk management plan just in case the market does kind of fall away a little bit going into the election makes sense. But for me, the chart at the moment is doing, as expected, as hoped, and long may it continue. Dell is interesting at the moment. Now, just for disclosure, this is actually one of our recent high conviction ideas that we sent out a few weeks ago. It's taken a little bit of time to get going, but it has broken out of a 3-month cup and handle pattern. There is lofty upside targets there with Dell as well. Solid earnings growth, I think reasonable PE ratios, etc. It's not tremendously overvalued, etc. And hopefully Dell will just continue to move higher from there. Cameco Corp, again a chart I've been covering on X. Buy low, sell high. That there's nothing wrong with the chart here. I think the targets that I've been working with are very reasonable. I think the levels that we're working with are up around $55. I think those of you that have bought the lows in CCJ have caught that uranium bid. I think these are obviously very nice numbers, and anyone that's out there that's holding CCJ, congratulations, buying the dip. Looks like it's winning again. Motorola, I said with Motorola last month that I think any kind of weakness you could look to buy. But this thing, if you're not familiar with Motorola, just have a look at this trend here. This is a weekly chart. It's had 2 down weeks in the last 5 months. It's just an absolute rock star, and the chart that we've been working with over the last few months has just been playing out beautifully, and we are solidly on our way to the next upside target there, which is around 578. Apple, again, it's hitting a little bit of resistance here around that 232, 233 level. No real conviction where Apple goes from here. Again, it's a chart I've basically covered every single buy point on it over the last few months, and it's ultimately met upside target. So I think there has to be either a deep pullback or it's going to have to take out those levels up around 238 for the potential for a new uptrend. But again, it's Apple. I think if there's any serious weakness, then hopefully you understand that it's one that you just buy hand over fist. Goldman Sachs, very close to another breakout. If you follow banks, financials, etc., regional banks, you know a lot of them are setting up technically at the moment. Goldman Sachs is no different. I've got Fibonacci targets here, working with up around 610. I've also got Chipotle. Now, Chipotle has been a frustrating one, actually. This is actually one of our high conviction ideas that it's open. But it is currently just chopping about in this little range. I'm viewing it as a 2-month cup and handle pattern. So I think if you are going to consider this one in October, I think it probably has to take out those levels at $59 to be interesting for new positions. I think this weekend I'll just be communicating to our clients that if it does fail at these levels, then whatever minor profits are in it, I think it makes a lot of sense. But our trailing stop is already up at the entry position, so that's the way that we're kind of working with that one at the moment. AMD, again, it's been another buy low, sell high chart. The targets that we're looking at here are pivot levels around 185. Obviously, with AMD, massive earnings growth. I think the valuation up around 201x. PE ratio is obviously quite high, but the market doesn't seem to care. It's paying for growth, and I think 185 seems like a logical target there. Same with Royal Caribbean. I have been covering this one over the last few months. Massive buy low, sell high opportunity. The upside target that we're working with Royal Caribbean is around $217, which does represent a bit more upside. But again, the caveat is what comes next with the market. ON Holdings, again, been asked to cover this one. There is no change to this chart whatsoever. The level that we're working with is still $55. So if you have been out there and buying up ON Holdings, congrats. There is still a massive short interest on this one, around nearly 10%. So I think that's probably what's fueled a lot of this motoring higher over the last month. But again, $55 would be the level to keep an eye on there. NU Holdings, again, pulled back. It is currently range bound at the moment. It's very, very similar looking to the chart for Chipotle, where it's currently at the low end of the risk range. So it might be a potential buy low opportunity there. But if you do prefer breakouts, then I think a breakout above $15 might make some sense. And somebody was asking in the channel, and this might be something to consider as well. I put out my monthly YouTube analysis every month. If you want me to cover a stock next month, let me know in the comments. I'll take a look at a few of them and perhaps add them in. I think Verizon makes a lot of sense on a lot of levels. I think it's on the radar. I think especially a lot of our clients get requested this chart quite a lot, but it's viewing it as a massive 9-month base, and looks like it's basing again and potentially in the next leg higher if it can kind of get above that 45-50 level. There is a decent volume profile on it as well, where there's a lot of above average volume coming in as well, so that might be something to consider over the next month as well. But if you are still here, if you're new, wondering who I am and what it is I do, feel free to jump on to our website at honeystocks.com. There is a link in the description. All of our transparent timestamped work is all laid out. I only use my own charts and data, but what we do is provide memberships to all of our premium work, which includes all of our premium weekend analysis, which goes out every single weekend with all of our best charts and our weekend hot list. We provide access to all of our highest conviction investment ideas. I will show you what that looks like in just a second. And also our midweek halftime analysis, which is a very short 5-minute video just covering the market midweek, as well as a few trade ideas. We also provide access to wonderful, highly intelligent community of professionals, investors and traders from all across the world. Access to all of our chart books, which cover the most liquid stocks, ETFs and commodities, and also our Trade Ideas Bank, which has around 100 top trade ideas as well as the charts. And if you are someone that's perhaps new to technical analysis, I also provide access to our complete technical analysis program, which I'm told is very well built, easy to understand, and gets a lot of positive review. But just to show you what our highest conviction investment ideas look like, this is a recent idea that went out for NVIDIA. Again, it's more of a buy low, sell high opportunity. Again, Southern Copper, this just went out 10 days ago. It's absolutely ripped higher from these levels. I think we're up at around 120 at the moment. So very, very easy to understand. All the instructions are laid out. Rocket Companies, which absolutely ripped higher. TKO Holdings again worked out incredibly well. Spotify worked out massively well. Charter Communications was a massive gainer as well. But I am very, very unique in what I do. I log for complete transparency all of our highest conviction ideas. I've done this every single year for the last 7 years. It's all laid out on the website. So please do check that the types of stocks I like to recommend are the types of stocks that you like to buy. I'm not pumping and dumping penny stocks, or it's all high quality stocks, high quality charts. And feel free to go and check out the performance and how the stocks have done over the various periods. But I think if you are someone who has a mid-term approach, if you're looking weeks to months, I think my work's probably a good fit for you. Maybe you're sick of day trading and you can't kind of make it work, which I think most folks kind of come to that realization at some point. Maybe you're looking to just learn about technical analysis and systematic process. Maybe you're too busy with work, life, family to find the best stocks, etc. Maybe you just want to be part of a community and you're sick of hunting around social media. Whatever your deal is, if you want to have access to a professional analyst every day, I've got a very professional setup. There's a link on the website just to show you the welcome tour, to show you exactly how things work. But yeah, please do check out our website, link in the description. But if you have stuck here to the bitter end, thank you very much for watching, and I hope you have a good October. Thanks as always.